In this episode, we're joined by Ahsan Raza from Canada.
I was born in Karachi, Pakistan. My father was always giving me advice into getting into my own business one day. I went to school for accounting and I wanted to get my CPA designation. I went to KPMG. I worked there for about a year and a half. That didn't go well, unfortunately. They didn't like me. I didn't like them. I did get fired from that job. And then, over here, if you get fired or have nothing to do, the next best option is real estate. You get your license and it costs about $1,000 and that's what you do. My father told me, look, if you're not enjoying it, then you have to find something else. A guy there training the office, his name was Rock Thomas, and he was phenomenal, man. He was like, you got to write things down if you want something. You got to think positive. And so these are all things that were already built into me when I was a kid. The rejection, it was horrible. Me being an introvert, obviously, it was more painful, right?
But it still takes that one yes. You can handle 99 no's. Once you get that yes, you understand this is the process. You have to get 99 no's to have one yes. Before I begin this podcast, I have a small request. I just saw my YouTube analytics and saw that over 90% of people haven't subscribed to this channel yet. So I have a small favor to ask you. If you've ever found value through this podcast, please do me a small favor, hit that subscribe button, ring the bell icon, leave a comment, like those videos, share them with your friends and family who are trying to build a business or just trying to understand how things work. It would mean the world to me if you do that. It allows me to bring on more guests who are trying to bring more value to you. It just makes this channel bigger so that I can bring on more guests, help you answer a question, essentially trying to bring value to you. You can also ask me a question in the comments and I can ask them to the guests or I can answer them myself. So please do me a small favor, hit that subscribe button, ring the bell icon, leave a comment, share the videos with your people. That's it. Now back to the podcast. In this episode, we're joined by Ahsan Raza from Canada. He's been in the real estate field for a very long time, I believe 10 years. And he's here to share with us some interesting insights on the real estate market from Canada. I'll try to ask him about different questions, learn about his strategies, how he's navigating in this market. Before we talk about all the strategies, your story, Ahsan, how are you doing today?
I'm doing good, man. Thank you so much for having me on. I know we were speaking offline a little bit. I'm just recovering from a little bit of a fever, but hopefully we will get through this interview.
Yeah, I'll get you charged up. Don't worry. I have a lot of interesting questions to ask you. Ahsan, before we get into real estate and all the business stuff, let's talk about your story. Can you give us a little bit of background? How did you get into the real estate? And even before you got into real estate, what were you doing and why did you choose real estate? So give us a little bit of color on that.
Yeah, no, absolutely, man. Happy to share my quick story. So I was born in Karachi, Pakistan. My family came here in 1990. And then my father was always giving me advice into getting into my own business one day. So that was kind of, brought into me when I was a young kid. I went to school, to be honest, for accounting, and I wanted to get my CPA designation. That went well, 4 years. I went to KPMG. I worked there for about a year and a half. That didn't go well, unfortunately. It didn't sit well with me. They didn't like me. I didn't like them. So I did get fired from that job. And then, over here, if you get fired or have nothing to do, the next best option is real estate. You get your license and it costs about $1,000 and that's what you do. But my father was probably the main person that kind of spearheaded me to get into real estate. My focus was not just to become a real estate agent, but become more of an advisor to my clients. So I want to differentiate myself because in Ontario, we have about 70 or 80,000 realtors in total. I didn't want to be a cookie cutter agent. I want to really differentiate myself. So that's the path that I went down. And I think that's sort of helped me stand out a lot within my community and also, across the region as well.
Right. It's something that I've observed. You shared, you got fired, you weren't good with those people, that industry. I've seen people who have that kind of a background, who do not get along in the corporate like me, right? We kind of have to fight our own way, find our own niche, figure out what we want to do. And that's an interesting path that you took, getting into the real estate. So give us a little bit of story on that. What was that experience like? Why did you choose real estate? And did someone tell you if you're not good at this, you should try this because this seems like a good career path for you?
Yeah, no, that's a good question. So, after I got fired, I still tried to give the accounting another shot. I was applying for jobs. I was still doing my designation on the side. But at some point, my father told me, look, if you're not enjoying it, then you have to find something else. So what I was always taught as a young age was, do something that you're passionate about. And real estate wasn't something I knew much about, but in the back of my mind, I always saw my dad's friends and my dad buying properties, making investments, and making profits, helping people out. So that sort of, really attracted me to get into the business. Obviously, in the beginning, I had very little idea of it, but as I joined, what I did was the first thing I did was I joined a training session, a coaching session through my brokerage. And that opened up my eyes completely because not only did they teach me sales training, they also taught me psychological training, how to think,
Right.
how to improve, how to think positively. Because I was thinking very negatively after I got fired. And I want to change that perception. It happened by luck. I went to the office. I never went to the office. I used to work from home from then. One day I went to the office and there happened to be a guy there training the office. His name was Rock Thomas. And he was phenomenal, man. Like this guy was like, high energy. He was like, you got to write things down if you want something. You got to think positive. You got to visualize. You got to ask, God, if you believe in God. And so these are all things that were already built into me when I was a kid. And I'm like, okay, if I can do all these things and then learn the real estate business and how to be successful in it, then I will become passionate about it. And so I used that positive energy and I went all in and learned as much as I could about the real estate industry. And honestly, man, it's been so much fun waking up in the morning knowing that I can go into work, that's my own business. It's probably one of the biggest blessings, I have had, and it's all thanks to my father, to be honest with you.
Like it just takes a little bit of positive reinforcement and push from somebody who can tell you like this is how you do it, and then you kind of believe in it and you follow that path. And like people, somebody who is listening to you right now, like they may be in that situation and they would want that push. Like you had a mentor, you like learned from Rock Thomas, right? So he gave you a little bit of training, he gave you a little bit of push, got into that mindset like this is how I should do it. And that's really amazing. That's all you need. And it takes a while to get into that phase. Did you make any mistakes in the beginning? Like you didn't, before we get into that, like did you have any sort of experience with related to sales, right? Because that's the major part of getting to real estate.
Right, that's a good question too. So, I did have previous experience because, when we came to Canada, my father worked at the bank for a year and then he opened up his own business as well. So, over the last, I would say, last 30 years, he's had different businesses, retail stores, electronic stores, importing, exporting. So I was always around him. And obviously, it's like when you're around somebody who is doing what he's doing, you pick up on things. So my dad was a very, very good salesman. And, just kind of looking at him, learning from him. And to be honest, I actually hated going to the stores because I was like, I want to stay home and watch cartoons, right? And I was like, man, this is a drag. But I remember grade 9, grade 10, grade 11, my mom wasn't feeling well. So she was helping my dad as well. So my dad would tell me to go to the store. It was a flea market. He would tell me to go to the flea market, we had a video game store at that time. And I was like in high school. So I was like, I got to do homework. I want to play basketball. I want to watch cartoons. But for 2 straight years, I used to go take the bus, an hour and a half there, hour and a half back. And my dad was very hard on me because he was like, I'm not dropping you off. You got to figure it out yourself, right? So knowing that back then, although I didn't enjoy it, looking back at it now, I learned so much from that, not just from sales. And I'm not trying to be arrogant or anything. Like I'm trying to be as humble as possible. But what was big for me was just interacting with so many different people, right? People that are, nice to deal with, people that are not so nice to deal with, people that are sort of introverts, extroverts, and just picking up on different people's styles is, I think, 10 years later into real estate, I had no idea that skill set would now help me in the industry that I'm pursuing now. So, I mean, that's the kind of sales, I would say experience I got, not direct experience, but sort of indirect, almost like by association, and we were being around my dad and his business at the time. Yeah. So I hope that makes sense.
Yeah, that totally. Like, but before you got that, like, were you an introverted person? Like, were you able to reach out to people, or like you picked it up?
I was always introverted. I'm still introverted, to be honest with you.
So how do you? Okay, this is a really great segue. Like, it's really difficult for introverted people. Like, If you had asked me like 5 years ago, would I be able to reach out to people, build a podcast, do these things, reach out to people for business work? Like I would have said, like I would have laughed at you. But now, like it comes natural to me, and it's very interesting. Like you said, you're an introverted person. So how do you make sure? How do you not take it personally? First of all, like you get a lot of rejections when you're reaching out to strangers, and like how do you still find the courage to reach out to new people?
Yeah, no. So yeah, I've been introverted all my life, always been a quiet person, quiet guy. Um, I remember when I was at a community event, I had just gotten my license, and there was this older uncle who I looked up to a lot, and he came up to me and he was like, "Oh, you got your license?" I'm like, "Yeah," and he was like, "Oh, but you're very quiet. I don't think you're gonna make it in this business." And I was like, that crushed me because I used to look up to this guy
Yeah.
so much. And then I remember telling, maybe it was my dad or one of my brokers, I was like, look, I don't speak that well. Like, I can't communicate well with people. I don't know what to say. But somebody, I don't remember who it was, but somebody along the way told me something very interesting. He said, in sales, you don't have to talk. The more you talk, the more damaging it is. Sales is 90% listening, 10% talking. So I'm like, I can do that. I'm a pretty good listener, but that's all I do. So, I don't talk that much. So when I figured that out, I basically would mirror the customer in front of me, and I would ask them like five key questions that I had on my paper, and I would let them talk all they want, and I would have sort of like a conclusion summary, and they would love it so much because people love to talk about themselves, right? Like people love to hear their names. Like I would
Yeah,
say,
yeah, yeah.
hey, Akash, Ahsan, like whenever I say their name, like they just sort of, automatically just kind of have this
Yes.
energy. So I realized that 90% of it is listening, 10% of it is talking, but that 10% is what I really harnessed in. And now I would say, obviously, I'm much improved. I can go and talk to people. But yes, I do get butterflies, but I take it on as a challenge and I'm excited about it, especially if it's somebody newer. And I think you know Jas, right? Jas
Yes,
Takar,
I do. I
right?
do. I
Yes.
love his work.
Yeah. He's been like huge like mentor for
It's an
me. And that
inspiration.
yeah, he's been huge. So he's the one that always tells me, he's like, you gotta be, you can't be afraid to get rejected because,
Yeah.
at the end of the day, like, what's the worst that's gonna happen? They're gonna say, no, you're not gonna die. So it's like, just keep going. And as you get the reps in, I feel like you kind of get used to it. So yes, I'm still introvert. Like if you put me in a group of 20 people, I'm like, I get uncomfortable, but that's the challenge I take onto myself now, and I try to talk to as many people as I can. And then at the end of the day, it becomes fun and I enjoy it. And that's me. You can't change my personality, but I can sort of navigate through that and do my best.
Sound awesome. Big shout out to Jazz, by the way. I love his work. He gave me the most wholesome experience. Like around Christmas time, he invited me to his office. We did a podcast in his studio. Like it was so amazing. Yeah, it's so amazing. Uh,
His whole
right.
team, they're all fantastic, man. Yeah.
Yeah, yes, they're all amazing. Now, okay, did you make any mistakes around, like, let's say in the first 6 months, you got into real estate, you reached out to 10, 20 people? Like, did you make any mistakes there?
Yeah, definitely a lot of mistakes. I still make mistakes till today, to be honest with you, because I'm not a finished product by no means. Like I'm barely scratching the surface, to be honest with you. But the key mistakes I made in the beginning were I underestimated the power of my database, right? And basically, I would look at my database and say, I'm too scared to call them. I'm too scared to get in touch with them until I took the training from Rock Thomas, Jas, and these guys. And they said, no, your database is your customer base, right? And if you provide value to them, there's no harm in asking for them for business or referrals. But if you're just going to call them and say, hey, I'm in the business, do you know anybody? That's not the right approach. So I think what I did in the beginning was that's what I was doing, but I wasn't providing them any value. Like I wasn't saying, I wasn't giving them market updates, what's happening with interest rates, what's happening with homes in the area. I was just kind of going along the flow and be like, hey, you want to buy? You want to sell? This is a good time. That's what everyone said, right? But then I
Yeah.
learned over time, it's like, okay, you got to provide some sort of value. And then a coach of mine by the name of Brian Buffini said, once you provide enough value, you then earn the right to ask for business, right?
Yes.
And that stuck out to me. So even till today, now I don't make that mistake as much. I try to stay in touch with my database at least 4 times a year, right? I have a bunch of contacts that I know personally. It's mostly word of mouth referral. And thankfully, over the years, they've appreciated the value I've given them. Now I'm doing the videos, just like you are. And when you provide enough value, there's nothing wrong with sort of, going back to them and saying, look, I hope you enjoy this video, this content. By the way, if you know anyone else that would benefit from this information, can you please share this video to them or get me in touch with them? I'll be happy to give them the same advice, right? So that's kind of what I've improved on. But that was the biggest mistake I made in my first 2 years, I would say.
Yeah. But it still takes that one yes. You can handle 99 no's, but once you get that yes, you understand, okay, this is the process. You have to get 99 no's to have one yes. So what was that experience like, the first yes that you had?
Yeah, so the rejection, it was horrible. I mean, being an introvert, obviously, it was more painful, right? Because I had to pick myself back up again. But you know what? Once you get that first yes, like you said, it's a game changer because then you realize it's not everybody has to give you business. But if you make 100 calls and you get one yes, then that's all you need. Like it's a numbers game, right? And those 100 calls you actually made are not calls that went to waste because you provide them with value. One time or another, they will come back to you because they'll remember that you called them, right? Obviously, if you're going to make a spam call, that's different. But if I'm saying, look, this is what the market's doing right now. Just want to fill you in what's going on. Hey, where's your headspace at when it comes to real estate? Like, "Nah, we're not interested right now, but we'll give you a shout." Okay, that's a rejection. You keep doing that over and over and over again, you'll hit someone that will say, "Hey, man, I was just thinking about buying a house or investment property." You call it the perfect time, right? It's a law of success, law of vibration. It's the universe, how the universe works. Fortunately, but people have to realize that, and then you got to get through that phase. And I think you get used to the rejection over time, and over time, those 90 calls you made to those people at some point will remember that you call them, and when they're ready, they will call you back. Right? And so that's how I look at it. It's never a waste of time, in my opinion.
Yeah.
I hope that makes sense.
Yeah, absolutely. I can totally resonate on that. Like not just real estate, that's like the holy grail of business. Like you have to go through that. Like you have to follow that process. You have to follow a system, and like it's all like part of the process. You have to get no's and then one yes. That's all you need.
That's all you need. Yeah. When you get that one yes, it snowballs and you pick up momentum. You get excited. And then you'll start to see more things come towards your way, right? So it's just a positive mentality, and that's what it is.
Yes, I can totally resonate on that. Okay, let's touch base on real estate. I heard, like I'm primarily from the stock markets. I track capital markets. I also track like different industries. I'm looking at real estate as well. Like Canadian real estate market is picking up slowly. Like I read recent data that the sales have been like 7 months high. Now, how do you read the current market? Let me just break the ice. Like, how's the market looking like for you? And the second part of this question is like, we are seeing aggressive rate cuts now. We just saw 3 consecutive rate cuts. I think we are at what, 4.25. Canada is at 4.25, I believe. And correct me if I'm wrong. Like, I'm not too sure of that data point. Right, we're at 4.25. Right. Do you see any sort of, are you correlating any sort of data to the real estate market for the next 6 months? Or you're just going it by like the sales numbers, you're just looking at the inventory numbers? Like, how do you assess this market?
Quick one, if you haven't subscribed to this channel yet, please do me a small favor, hit those buttons, you know the drill. Your support is the only reason that I've been able to have these incredible guests on this podcast who are trying to bring more value to you. So please do me a small favor, hit that subscribe button, like the videos, ring the bell icon, leave a comment, share the videos with your friends and family who are trying to build a business, whichever platform you're consuming this on. That's it. Now, back to the podcast.
Yeah, no, it's so first of all, obviously, when the rate hikes happen, the prices plunged, right? And demand went down severely. And so there's always, the rule of thumb is always there's an inverse relationship between interest rates and home prices. When interest rates go down, home prices go up, vice versa, right? So what I'm noticing now is that I look at inventory a lot, right? And months of inventory. So right now we're sort of at 3.5, 4 months of inventory. So we're kind of in that buyer's market. And there's a lot of options, a lot of opportunities for buyers to get in and get a good deal. The condo market is just like, I mean, it's down, it's spiraling big time. There's 6 months of inventory there, and anybody can walk in right now and pick up a great deal in the condo market. Now, with the rate cuts happening,
And quick question on that. Like, are you talking about the GTA or are you talking about other parts of Canada as well?
this is just GTA. Yeah, this is GTA.
Okay.
Yeah, but just to paraphrase, high level across Canada, sales have definitely been down, but GTA has seen, a pretty downward pressure in price and also home sales as well. Like we were, peak COVID, it was like 110,000 sales. Last year, one of the worst years in 20 years, we had 65,000 sales, almost half of that, right? And a lot of agents left the business, and that was because of the rate hikes actually. So now we're seeing rate cuts happen, but what's interesting is that everyone is waiting for the rate cuts, a lot of the agents, but we're not seeing the movement back up as people, suspected. And so the reason for that is because it still costs $1 million to buy a house in Toronto, right?
Yeah.
So maybe it's not supply, maybe it's just affordability. Like people, it's hard for people to afford a house for $1 million, even though prices have come down 20%. The other issue is that, when rates were at 1.25, 2%, you had more purchasing power, right? Because rates were low. So even though prices have plunged 20, 30%, the rates are still 4.5, 5%. Who's going to be able to afford that? And now what's happening is that we've got about 25,000 homes for sale in the GTA, which is
How many? Come again?
25,000.
Oh.
Yeah. And basically what's happening is that a lot of the sellers who I'm speaking to and that are in the market are waiting for rates to come down even more. And when they do, that's when they're going to list the property. So when that happens is you're just adding more inventory into the market. And so I think the next few months, I could be wrong, but the next few months, in my opinion, I don't think the market's going to like fire up like crazy like it was back in COVID. There will be some uptick, but it's going to be very slow and steady. So I think we're going to have appreciation, maybe 2.5%, 5% year over year for the next decade or so. Again, the GTA market can change overnight, and I've seen that in my last 10 years of the market. But I think this time around, it's going to be a bit more slow and steady, which is good for buyers and sellers because, when prices go out of control, it's so hard because it's so hard for buyers to get into the market,
Okay, quick question on that. So you said like the general pattern is like when the interest rates go down, the home prices go up. But do you think that there could be an anomaly this time because the overall economy is not in American market, like North American market is like kind of struggling with stagflation, inflation, a lot of different like financial problems. Do you think the prices could come down then?
Yeah, it's very much possible. So that's where me as a realtor, I try to be more objective. Unfortunately, a lot of our colleagues, when the rates come down, they're like, oh, prices are going to go up. You got to get into the market right away. I don't follow that trend. I like to look at the markets, unemployment, inflation, what's happening with the economy in both the US and Canada. I know you probably know more about that. I have more of a high level surface idea, but I look at sort of stagflation, I look at inflation, and I still see the cost of goods in Canada are so expensive right now, right? I mean, you look at gas, you look at food, you look at schools, everything, daycares, private, all this stuff is eating away at people. I was watching a video yesterday, and this guy was talking about one of his developer friends, a developer, like multi-millionaire, who builds homes, makes tons of money, and this were his exact words. He's like, although we're making tons of money, I don't feel so good because it's basically living paycheck to paycheck almost, even for these multimillionaires, right? Because expenses are so high. So if expenses are going to keep being high, how is one going to be able to afford a house and pay for the mortgage, right? That's why I think that the market will not heat up significantly, but we will see maybe slow and steady appreciation. On the flip side, if let's say, inflation keeps sort of, it's still volatile, I could definitely see prices declining, even though this could be an anomaly, like you said. But at the end of the day, I do think that there is still a lot of pent-up demand in our market, and it all depends. It all depends on where inflation goes, where interest rates go. And despite the fact that things are expensive, there's still a lot of people in our market that have the capital, that have the money. And it's like the rich get richer, the poor get poorer, man. That's the game.
So
Yeah. What are you advising your clients? Like, what should they be doing in this market? Like investors.
My humble advice to my investors is that you can find a good deal in this market, but don't rush to pull the trigger, right? So take your time, look at your options, look at the landscape, see where you can get the best opportunity, look for desperate sellers, right? And see where you can capitalize, right? So for example, I had a client who was like, oh, and yesterday I was like, I found this house. He's like, I want to buy this house right now. I'm like, let's wait. Let me find out more information about the seller. How desperate are they? Are they in a difficult situation? And obviously, it's sad because someone else is struggling. But at the end of the day, there are deals to be had. And so what I'm telling them is to take advantage of the market, but take your time. Don't rush. Have a pulse on the market. But when you find that deal, and if it's a really good deal, don't be afraid to pull the trigger. And if you just started out, just take a look first, take a couple of weeks, don't rush, take your time. The next 6 months will be opportunities anyways. It's not like the market's going to skyrocket all of a sudden. So you have time to think about it,
Yeah. Right. Yeah. This is a marathon. Okay. That's like what we talk about investors. But do you have any particular markets like in the GTA that investors can look at if they want to invest for the long term, not just trying to buy a house and then flip it, expect some sort of capital appreciation in like 6 months? That's not, we're not talking about that. But let's say who are in it for the long game, who want some sort of positive cash flow on their properties or investments. So do you have any sort of market ideas that you're looking at?
Yeah. So to be honest, for investors, we're not really even looking at GTA much because the home prices are so high and you're not getting any positive cash flow here, right? Even with 20% down, 30% down. So there's two options. One option is the condo market has come down tremendously, right? A condo that used to be worth 700K is now worth 520. That's where you can get in, not for the positive cash flow, but for future appreciation value, right? Next 5, 6, 7 years, right? So you still may be out of pocket a couple $100. That's one play you can do. The second play is, what I'm telling my clients is, let's not look in the GTA. Let's look at the outskirts of the GTA. So if you're familiar with cities like Barrie, for example,
yes.
Kingston, Ontario, Windsor,
Yes.
Ontario, London, Ontario, that's where the deals are to be had, right? And that's where you can get a house half the price of Toronto. You may be able to cash flow. And believe it or not, the appreciation in those markets almost mirrors the GTA, surprisingly, right? I have a couple of investment properties with my partners in Kingston, and we've done really well the last couple of years. And the rental market there is phenomenal. Like you attract very good clientele, very good tenants because these are cities that are thriving. And what's amazing is that the biggest objection I get is, how are we going to manage the property if it's in Kingston, for example, right?
Yeah.
Nowadays, everything is remote. Like you don't have to go to the property if the toilet breaks down. I have a list of tradespeople on my spreadsheet that I send to my clients. I keep for myself. I say, look, if the toilet breaks down, you call the plumber, call this number, they'll go in, they'll do it, right? And you go take a visit to the property once a year. That's it. So I think that's the biggest objection people have, but there's some really good opportunities now outside of Toronto. Within GTA, I would say I wouldn't really advise much from an investment standpoint. But if you really do want to invest in GTA, then maybe the condo market, if you can find a good deal, might be a good place to start.
Yeah. I was speaking with a friend of mine recently. He didn't talk about like core downtown Toronto, but he was talking about like Kitchener Waterloo. You're saying that he's able to find good deals there, and like he still has a positive cash flow. He's like seeing net positive on his ROI. So I think like, do you have any like ideas on like Kitchener Waterloo side? Like, is that a good market to look at?
That's a really good market, actually. One of my clients, we just closed on his property there, and it was my apologies. It was a duplex, and he rented out the top floor just now for about $2,200, and the bottom floor he's going to rent out for about maybe $3,000. It's a really big bottom floor area, and so he's not making a lot of positive cash flow, but he's also not losing money on the deal. So he's making a couple $100 a month. As the mortgage rates come down, his cash flow will go up. So Kitchener-Waterloo is a tremendous market, like I mentioned, along with Kingston, Barrie, these areas. And if you go with a duplex, triplex in these areas, man, the rental demand is phenomenal, and the appreciation standpoint is also just as good as a GTA at some points. Yeah.
Yeah. Is it because a lot of students are coming there? Like, is that the reason that that market is doing well, or is it something that the property values are cheaper there?
There's two reasons. So one is a student, right? Obviously, you're in a university town. And obviously, the further you get away from GTA, the cheaper it gets. But the reason why properties there are going to appreciate down the road is because the GTA is becoming unaffordable for a lot of people. And so what a lot of my clients, a lot of my friends, a lot of my colleagues are doing right now is they're like, we can't live in Toronto. It's too expensive. We can buy a house for half the price in Kitchener-Waterloo, and then we work from home, right? And so now you have this population migrating to these outskirts of the city, right? Where it's cheaper to buy a house. You still have all the amenities. There's still a Walmart there. There's a Costco there.
Yeah.
Everything is there, community. So what more do you want, right? And that's why you're seeing these prices go up, each year.
Makes total sense. Like, I would have done the same thing. I lived in Waterloo. Like, I loved it. Like, I loved it more than Toronto, by the way. I made a few friends there. Like, we used to play baseball. Like, I never played baseball. That was the first time that I was playing baseball, and I loved it.
Yeah, no, I love going there too. I mean, it's some place that we often frequent as well because of showings and stuff. But it's such a nice small little town, and it's a great community.
Right. Okay. Let's take a step back. Right. So, on your story, you started as a realtor. When did you start investing?
Yeah, I started real estate investing, I would say about 5 years ago.
Okay.
5 years ago, yeah. This was probably pre-COVID. 2018 is when I bought my first condo in Markham. And that's where I started. And then I sold that one. And I used those funds to buy our primary home, which we live in now.
Okay. So you had a good experience of investing in real estate. Did you use that kind of a strategy and use it in a way that helps the clients, as well as you build a new clientele through that strategy? Did you do anything with that?
Yeah, absolutely. So, I mean, when I bought that first property, I remember while I was buying it, I told 3 of my other clients, I'm like, hey, I'm buying into this condo, so I've got my skin in the game. Do you want to invest as well? And one thing that we look for is the future appreciation, which is determined by location, accessibility, transit, schools, hospitals. All these things are tied into future appreciation. And so now when they saw me investing there, because obviously I did my research, they're like, hey, this is actually, we feel safe going into this investment.
Yeah.
So they joined as well. We all made a good profit out of it. I'm not saying we made like so much money, but we made enough where all of us were able to use that money to leverage it and get something else. What that did was that helped me build credibility with these guys, right? And these guys were like 3 of my best friends. And now they're like, I would say word of mouth is a big thing, right? So now they've referred me so many clients. And now, although I don't invest in any project, anymore, but now I think my clients see that this is a good area because we trust Ahsan, and he's helped us before. And even with Kingston, for example, I went in there first before anybody else. And then after a year, I was like, this is pretty good. Let's get more people in here. Since then, we've had about a dozen clients invest into Kingston. And thankfully, they've all had a wonderful experience so far. So that's a strategy we've built. If I don't invest in it myself, I have my colleagues in my office who have invested. And so I said, look, this is a good friend of mine. I didn't have the capital, but he invested here. So building credibility, trust is very important in this business. I never want to sell something to somebody that I wouldn't personally buy. That's my strategy.
Yeah. Did you know why I asked you that question? Like, I'm such a nerd in that sense. Like, I want to nail down everything, like how people, like I'm like that. Like, I don't want to do anything that I don't actually understand. So I have to get the experience myself, share that story with people, and then help them, right? And I smell that authenticity in your content as well. I know that you're trying to build an honest personal brand. You're trying to help your clients. And these are the kind of little moments that we kind of oversee. And I kind of pay attention to those things like, okay, this is how I moved in this direction. And then I help my clients, I help my friends, and they build that trust. and we use that. I don't know, it kind of feels like something's there in there that we have to like focus and then maximize that, you can say, authenticity of ourselves, and like use that in our own business.
Yeah. No, authenticity is so important in our industry. And this is why I think a lot of people are turned off by salespeople, real estate agents, is because, the lack of honesty, the lack of authenticity is not there as much, unfortunately. And so I'm trying to sort of change that perception, right? I want my clients and my database to know that, look, I'm not here to sell you anything. I'm here to give you value and advice. And that's so important because, it's very important for me to let them know that I'm going to make a decision. I'm going to help you make a decision based on what I would do myself. So I had a client of mine yesterday I spoke to, and he wanted to sell his house. And look, I make money selling people's houses, right? That's my living. And sometimes you have to look back and say, man, I don't know if this is a good idea, right? Why don't you wait a couple of years and the market picks up? And I missed the listing. That's fine, but he was so appreciative that, and he was like, look, man, whenever I want to sell, if I have anybody I know, I'm going to refer them to you because you were just honest about it, right? And again, I'm not trying to say that I'm like this, whatever. Like I try my best to be honest and helpful. But I think it's very important for any business because I think what goes around comes around. And when you're greedy, it's a very short-term happiness, and it's
Yes.
one transaction. But when you're honest, I think losing that one transaction will actually get you like 5 more transactions in the future. That's how
Exactly.
you look at
Yes.
it, right?
Yeah.
And that's and Jas is the same way. He's taught me a lot about that. Like he's so successful, man, but he is so honest. Like he is so
Definitely.
humble with his words, man. Like that's just the way he is, right? And that's the kind of people I want to be around and be like at the end of the day.
Absolutely. Okay. And
I
let's
hope I'm
talk
not
about.
talking too much. Apologies.
The only reason that like I ask too many questions kind of these is because, first of all, like I want to know about you. I want to know how you learn about the markets, how you see the markets, right? So I'm a big nerd in trying to nailing down little details of different experiences.
Good. I have a habit of just keep blabbering on. So if I talk too much, let me know. So,
All right, let's talk about strategic decisions. So when you invest in the first property, you use that experience to help your clients, and then you build a strategy around that. So how do you assess a real estate property right now, looking back 5 years? Like what did you learn from those 5 years? Like how do you assess a property back? How did you assess the property back then, and how do you assess a property right now in terms of capital appreciation and positive cash flow? Do you see any sort of evolution, or is the strategy still the same?
it's a bit of both. I think what we look at now, or even back then, was I like to look at where is the next big boom gonna happen, right? That other people aren't seeing right now, right? And for example, like, people always say downtown Toronto is the best place to invest. It was at one point. Me, in the back of my mind, I'm like, okay, let me go to a market that people haven't thought of right now that I think is gonna blow up in the next 5 years. So this is where I came up with Kingston, right? And believe it or not, like I drove down there like several times, like week after week, just to study that market. I'm like, why haven't people discovered this market? Like, it's such a good market. Like, the rental market is strong. The prices are cheap, yes, but like, why haven't people discovered it yet? Because everybody's so focused on Toronto. So I did my research. I talked to the city. I talked about the growth potential, population coming in here. The universities, how many students are coming. Like all these. Like I'm a nerd like you, man. I like numbers. I like data analysis. So that's very key to me to make information. And so I'm looking for that next big city that's going to blow up. And so that was one. Barrie was another one. Back then when people were like, who's going to invest in Barrie? I'm like, trust me, Barrie is going to be a great place because as people start to move out of Toronto, the next place they're going to go to is Barrie, right? For example, there was a hospital that was built in Vaughan, if you're familiar with Vaughan, a brand new hospital that basically is 45 minutes away from Barrie, which is not a long commute, right? This was about 5 years ago, and I was like, I think a lot of nurses, doctors are going to live in Barrie and are going to take that Highway 400 and commute to the Vaughan Hospital.
Yeah.
So let's get in there first. So I got my client in there 5 years ago. And you look today, and he's like, bro, you're absolutely right. Like, like this is amazing. And again, obviously, it wasn't just me. I had a group of friends and colleagues who helped me do this research. But my main strategy was to look at markets, cities that not a lot of people have discovered yet, but are going to blow up in the next 3 to 5 years. Now that's even now. So now I've discovered Kingston. Now I'm like, okay, what's the next city after Kingston, right? And I've got a couple of ideas already. So I'm like, let's go out there now. Let's see what's going to happen there, right? So that's kind of been my strategy. I don't want to just invest where everyone's investing. I want to diversify and go against the crowd and see what happens,
Like we call that contrarian approach in the stock markets. So like I have a similar approach in the markets as well. Like it makes so much sense. The principles are the same. You found a strategy. How did you assess your risk there?
Well, first of all, it's very risky because you're one of the first few people going in there. But what I would do a lot is I would talk to the local realtors in that neighborhood, right? In those cities, because they have all the data points. Like if you're gonna invest in a city, you gotta talk to the people that are actually in the game in that city. So I spoke to like tons of realtors, and I would say, "Look, how is the market looking here? How is the rental market? What's the data points? What's been your sales history? How long have you been in this business for? Things like that. What are some pockets in this neighborhood that would really be a good investment process that would, get good demand for rentals?" And so I talk a lot to realtors. I talk to mortgage brokers a lot because they're the ones that are doing these applications. They can tell me, look, we've done like 30 applications in London in the last 10 months. We feel that London is a place that's going to really blow up. So that's kind of what I look at. I'm sorry, I forgot the second half of your question.
So how did you assess the risk over there? Like, did you have any sort of like metrics that you're looking, like you want to maybe like stay positive cash flow for the first 2 years, and then you were okay with some sort of negative cash flow for I don't know, in between, and then like were you looking at long term? Like what was your game plan there?
Quick one, if you haven't subscribed to this channel yet, please do me a small favor, hit those buttons, you know the drill. Your support is the only reason that I've been able to have these incredible guests on this podcast who are trying to bring more value to you. So please do me a small favor, hit that subscribe button, like the videos, ring the bell icon, leave a comment, share the videos with your friends and family who are trying to build a business, whichever platform you're consuming this on. That's it. Now, back to the podcast.
So there's three types of investments that I always look at in any market. One is positive cash flow. Second is appreciation. Third is pre-construction, right?
Okay.
In every market that we go in. Now, it's not a one size fits all. It depends on the client, right? So if a client wants positive cash flow, I'm only going to show him positive cash flow properties. So I'm going to discover in these markets, are there properties available? So those kind of properties could be duplexes, triplexes, and that's what I present to them. I give them a pro forma spreadsheet which calculates, return on investment, not just on your appreciation, but your principal recapture, which is where, for example, the tenant is paying off your mortgage, paying down your mortgage. So that's a return as well, right? We calculate what are going to be your closing costs, whatnot, maintenance costs. Based on that, I present that to the client. Then I present, okay, you're only looking for appreciation, but whatever the case, it should be long-term. It should never be short. Speculation is a very dangerous thing in our industry. It's something that I highly advise against, because people were buying condos left, right, and center, hoping that it would double in price. And now they're like, it's a sinking ship, literally, right? I'm like, if you want to invest in something, I'll help you, but you got to have a 5-year game plan minimum, right? So that's appreciation. Now, even appreciation, we look at properties where I don't want you to be like $500 in negative cash flow every month. That's going to burn you a lot, right? $200 is okay. $250 is okay. What I say is, look, you know what? Yeah, $200 is negative, but just save on dinner. Like, don't go out, for dinner for a couple of days in a year. Save that money there, right? You can make up for that. Pre-construction is where somebody who's maybe a first-time home buyer who can't get a mortgage right away, but has the money. So pre-construction takes 3 to 5 years to build, and you only get the mortgage once the property is complete. And so those are the three different strategies that we use, but we are very, very selective as to where we buy and how we buy and what the client wants. If the client wants something in this particular way, if he wants cash flow, we give him the best cash flow options. We're not going to, send him 30 listings. We'll look at 30 listings. I'm going to send him 2 that I think are going to be really good for him. So it's very, very, very selective, because I think the more selective you are, the better the chance that we can mitigate that risk as well.
Yep, it does. Now, okay, you had like some idea of the investing. You had some idea of how to help your clients, and you've seen some cycles in the market, right? Like you've been in the game for 10 years. Like that's a lot of time, first of all, right? So you've seen some cycles. Do you observe any sort of patterns? And like, did you pick up any patterns in, let's say, pre-COVID? Like there was a lot of talk of, I don't know if you're aware of, there's something called like, people were talking about de-dollarization. Like we were talking about inverted yield curve, like a lot of these financial terms. Do people in real estate like look at those terms? And do you also like kind of make decisions around overall economy, or did you just go by the market? Do you also go by like just assessing the current risk that you have?
Well, ours is more plain and simple, I would say, right? And it's more based on just the market itself. What I do notice is that history tends to repeat itself in the real estate market. And what I've noticed is, even before I got my license, is like every 5 years, there seems to be a dip, right? So in 2008, we had a dip because of the recession, right? Then the market peaked. I would say every 5 to 7 years. Then the market peaked. 2016 was like, it was at its top. 2017 came, the government came in, implemented some rules, and the market went down again 20%. Then you had 2017 was slow, 2018 was slow, 19 was sort of balancing it out. 2020, COVID happened, right? 21, 22, market peaked again, right?
Yeah.
Now we're in that 5-year term again. Now 23, 24, 25 looks to be like it's going to be a slow progression, right? So what I find is that's why I say 5-year, window, have a 5-year window, because you don't know what's going to happen. The other thing is that I always tell my clients, and people have learned from in the past, is that, you can't put all your eggs in one basket. So if you have capital, don't go out and buy 5 condos in the same building, right? It doesn't make sense, because when the market crashes, all your condos are going to be affected. What I used to do is buy one condo, buy one cash flowing property, and buy one property outside of Toronto, right? So if one market dips, the other market will still be okay, right?
Yes.
Because now if you have 5 condos in one building and they all drop, you're going to be a lot of pain. So diversification is very key in our industry. Don't speculate. That's the worst thing you can do. And at the end of the day, be selective and, understand that governments will always intervene when they want to control the markets. And I've noticed that every 5 years that happens.
And when they control the market, like how do they do it?
Yeah. So in 2017, what they did was they implemented what's called, Ontario housing rules, 16 new rules, which had no effect, by the way, but it was all psychologically to the buyers, right? So there was like foreign buyer tax. If you're a new comer to Canada, like all these different rules that didn't really impact the market per se, but people heard the media, they saw the headlines, and like, oh, we're not going to enter the market right now because the government's doing stuff, right? So that's kind of what happened. Then 2022, 23, interest rates just skyrocketed, right? Buyers were like, oh, we're not going to touch the market, we're going to step back, right? So that's where the government intervenes. Sometimes they have to. I think in 2017 they kind of had to, because prices were just skyrocketing, and that's why I don't like markets that just skyrocket, because then you're just asking the government to come in and do something to control that, and that just scares people off.
When I was there, the Canadian government was like allowing foreign investments in real estate, and then suddenly they stopped. And I think I spoke with a few people, they said that's going to have a huge impact in the real estate market. Is it still like, are we still seeing the tail effects of that decision?
No. So when that rule was brought out, to be honest, that never really had an impact on the sales, because there's no real data on how many foreign buyers actually buy in Canada, to be honest with you, which is surprising, right? But based on what we've sort of looked at, manually, you can say maybe 5% of all home buyers in Canada were foreign buyers, right? And even that number, like, we don't even know. So that rule, when it came out, it wasn't really effective in terms of the market itself, but it was more the media headlines that had a major play. when people read, oh, foreign buyers are not allowed to buy anymore. Oh, this is going to crash the market. So we're going to stop buying too, right? So that's kind of, it was more
Yeah.
psychological than actually
So it's just they're trying to create fear in the market.
create fear, I don't know what, honestly, sometimes I think that the people that are up there in the government, they think very theory based, right? Like they're
Yeah.
economists, they're professors, which is fine. Like I have nothing against them, but they're not like us who are boots on the ground, right? We talk to
Exactly. Yeah.
buyers every single day. We know what they're thinking. They're thinking more on like a, theory based level. Like, okay, if we make
Yes.
this rule, this is what should happen. But it's not like that, right? This is not a
Yeah.
class. This is real life.
Yeah, exactly. And do you see any patterns being repeated now?
Yeah, I think I look back at 2017 when the market dropped heavily, and then you had 2018 was very slow, 2019 was slow, 2020 picked up. Now, like I said, history repeats itself. So 2022, the market dropped. 23 was very slow, which imitated 2018. 2024 was a bit better this year. And I think next year is where things will pick up slowly, slowly and steady, right? So that it takes 2 to 3 years for the market to sort of level off again. But like I said, every 5 years, there's some sort of action from government or buyers, sellers, and then the rates now that they're going down, I think will have some impact on activity. It's not going to skyrocket, but we'll see some movement at least in the next 6 to 12 months, I would say.
All right, all right. Let's talk about we've talked about investing side. Okay, let's also help some realtors who are listening to you right now. How you got into the real estate field? You had a mentor. Maybe people cannot afford to hire a mentor. So, what advice would you tell them? How can they grow in real estate? People who have recently joined right now.
I would say the number one thing that you should do, if you're a newcomer to real estate, is that even if you can't afford to hire a mentor, speak to a realtor like myself or someone else who has experience and get their mentorship. There's a lot of people out there that are willing to help out, at no cost, right? I've got a couple of guys on my team right now that are newcomers and they're so hardworking, and it's like I want to help them out, right? But I do think at the end of the day, even though someone can't afford a mentor, I think the number one thing people should do is get a real estate coach in the beginning. Because see, when we go to real estate school, we don't get trained on how to sell homes. We get trained on how to write contracts, which, I mean, that's not really going to help us. Yeah, it will help us, but the name of the game is sales, right?
Yeah.
Hiring a real estate coach is such a game changer in our industry, and I'm surprised why more people don't do it. That's where my turning point was when I got that mentorship, when I did my real estate coaching, and when I went to JAS, for example. Yes, it costs a little bit of money, but it will make you more money. So if you have to borrow that money from mom and dad or do something, do it, because I think that's the biggest opportunity that's going to lie for you. If you don't do that, you're basically just setting yourself backwards. Real estate coaching, by all means, is a complete game changer because they will teach you the psychology of buyers and sellers. They'll teach you how to sell. They'll tell you about the market. They'll tell you how to speak to people, which is what I learned so much from my coaches. And I think if you don't have the money, if you really want it bad, you'll figure it out. You'll figure out
Yeah.
how to get the money and figure it out. Yeah.
Yeah.
So real estate coaching, number one, for sure.
Right. Okay. And how can realtors outperform their competitors? Like you just said that half of realtors went out of business recently, right? So people who survived that, you can say dip in the market, realtors who survived that crash, how can they outperform? And like, can you share some strategies with them? Like, do you have any sort of sales ideas? Like, this is how you like find leads. This is how you like reach out. This is how you like follow up with them. Do you have any sort of like tips and tricks for them?
Yeah. So again, this is where the coaching comes into play because this is what they teach us in real estate coaching. My advice or my strategy would be that if you have a database, right, of let's say 200 people and everybody knows 200 people at least, right? Whether it's
Yes.
family, friends, colleagues, school friends, whatever. It's a very simple system. The main thing in our business is going to be sales and marketing. And from 9 a.m. to 12 p.m., you have to lead generate, and prospect, right? This is where I was telling you about in the beginning. You got to make those calls and you got to add value, give some sort of value. Don't be scared to call your database, give them value. And if you do that consistently enough, right, over time, you will build your business and build your database and get referrals. There's no magic pill. There's no fancy way to lead generate. It's very comes down to making phone calls at the end of the day. As simple as that. So I'm not going to pretend like there's a fancy way of getting leads. It just comes down to phone calls. And then when it comes to following up, you have to follow up at least 3 times a week to your hot leads and once a week to your not so hot leads, but somebody who mentioned that they want to buy or sell. Now, the problem is that when we follow up with people, like, what are we thinking? We're like, we don't want to bother them, right?
Yeah.
That's the mindset,
Yeah.
right? But believe it or not, like, people like it when you follow up with them, right? When you follow up with them, they're like, oh, this guy remembered, I got to give him an update. And if they're like, why is he calling me? Then okay, then he's not a lead anymore, right? Like my example, I have a financial advisor, he calls me every 2 months, right? To give me an update in the market. Whenever I see his name on my phone, if I'm not busy, I'm picking it up because I'm like, I want to kind of hear what he has to say about the market, right? About the stocks, everything, right? So why wouldn't I pick up? So a lead who is really a lead is going to actually want to talk to you. And if he's busy, it's not because he doesn't want to talk to you. He may just not have time. Follow-up is so important. I think we have to get rid of the idea that people don't want us to follow up and that we're too scared to call them. If you provide value, you will get the business. And one last thing I'll mention again, sorry to keep going on, is that I think a lot of people in our industry focus so much on getting deals done, right? So like, okay, 2024, I got to make 20 deals. I got to make 30 deals. That's my target. I used to do that too. And that was so stressful because it takes time to put a deal together. And what my coach taught me was like, stop thinking about the number of deals you're going to do, but think about the number of leads you're going to get in the year. Because now it's going to be more fruitful. So now what I do is every year in the beginning of the year, I say, okay, I'm going to get 160 leads this year. In our business, 1 out of 4 leads always works out, right? So if you have 4 leads, 1 will definitely buy. It's like a rule of thumb always, right? And so if I want to get 160 leads, that'll give me 40 deals, hopefully, right? Or around 38, 42, right? That's the goal. That's the strategy. Thinking about the number of deals you're going to do is going to stress you out so much because if you don't hit that target, then you're already lost. So now think about the leads, and that's the system that I play.
Yeah. And there's another thing that stops people from reaching out, like making phone calls. It's like they have this preconceived notion, right? If I only had this tool, if I only had this CRM software, if I only had something to like that reminds me like I have to call, only then I'll be able to do it, right? Yeah. We talk ourselves out of these situations of taking action. And like that's one of those major things that affects the outcomes in sales. Now, okay, sales is one thing that people should focus on. Then there's database. Now, do you have any sort of time frames that you can share? Like if you reach out to one person, like follow up with them like after a week or 2 weeks. Do you have any sort of set timelines?
Yeah. So I'll just tell you what my coach tells me, who I'm still with right now. So number one, like I have about 400 people in my database, right, that I've grown over the years. It's not a lot, but actually it's enough to get referrals. I call each person, or I try to call each person in my database 4 times a year, once a quarter. That's it. And that's not a lot. That's it. Now, if I get a lead, what I do is I make a separate chart and I say, these are the leads that I have, right? Those leads, I will call them like I said, 3 times a week if they're a really hot lead. And I will do that for 2 weeks. After 2 weeks, if they're not picking up, they're not interested, I put them in my deleted section. If they call me back, I'll be happy to help them. So that's the strategy. When it comes to not hot leads, but like leads that, just kind of mention, hey, yeah, we were thinking about it. I'll call them every Friday. That's my go-to. So it's a very simple system. I'm not a very technological guy. If you ask me to use different formats and like I suck at that, right? But what I am good at is pen and paper. So, and I keep a list of that and I convert that into my spreadsheet. And so it's a very simple system. And then again, if they don't pick up the phone, I put them away. What that does, in my opinion, is that once you're doing that process, even if you feel like you're putting in the work, you're not getting the results. I think the law of success says as long as you put in the work, somehow, some way, God will indirectly send you something from somewhere,
Yeah.
and that is how it always works. I think people
Yeah.
lack faith, right? And that's the problem.
Yeah. And then, like, you reached out, your process is you reach out to people, and people who kind of reciprocate, you stay in touch with them, you try to build relationship with them. And I think that's one area that I mostly focus on. It's trying to build relationship, even if you don't have business. Like, even if you don't, let's say, I don't know if a client that I work with, a lead that I have may become a client. Like, it may take 2 years, it may take 3 years, but I don't know. But I'll try to stay in touch with that client. So, do you have that same approach?
Yeah, it's the long game, man. It's the long
Yeah.
game, like you said, right? And the authenticity. So, I've had clients who I have started 10 years ago who I reached out from day one, literally. And because I reached out to them every single year, 4 times a year consistently, or I tried to. I mean, I dropped the ball a few times, obviously. I'm not perfect, but um, it's been like in the 7th or 8th year, they've been like, oh, you know what? We appreciate what you've done. They've never bought from me, but they've sent me referrals over and over and over again. So even if that person hasn't bought with me, they put me in touch with somebody else. Some of my biggest clients are not people that work with me, but sent me the most referrals in the last 10 years. And they've never bought. And they actually work with another agent actually, but they like my constant follow-ups. And like, we want to give you business. So here's a referral of a friend of mine. So it's interesting.
Yeah. I mean, like, that's what I do. Like, that's what I'm good at, actually. Like, I'm trying to do the same thing in my business. I do the same thing in my personal life. I don't try to, like, overcomplicate things. I focus on building relationship, and then if you're good, like, we'll do business. Like, that's all I do. And, like, yeah, I mean, Ahsan, this was an amazing podcast. Like, I loved talking to you. I hope people found it useful. Before we wrap up, like, any last few thoughts that you'd like to share with people? People are struggling. First of all, like, the whole point, if somebody's trying to listen to this end, like, they're trying to learn from you, what should they be doing in terms of the next phase of growth? And if an investor or a realtor, both those kind of people, they're struggling in their business in some way, how can they improve?
Yeah, no, that's a great question, man. I think I look at myself, honestly, and my colleagues as well. We did struggle when times were tough, obviously, but we kept doing the activities and stayed on the fundamentals, right? Which in our business was prospecting, right? 9 to 12 every single day, prospecting, even though nobody was buying, nobody was selling. And what I say, this is what my dad taught me a lot, and what Jasmine taught me a lot, is that when business is down, it's actually a good thing, because this is the opportunity where you can gain market share, because people will leave the business. But if you stay in the business and show your clients that you haven't left their side, they will appreciate you so much more. And thankfully, this year, although sales have been down, it's been good enough where the people that used to work with other realtors have been reaching out to me now, because they said, we still see you doing content on media, on social media, on YouTube, and we really appreciate that. Because of that, we want to work with you, right? So I think in a down business, never give up, right? You can never beat the man that never gives up. That's a good saying that I always go by. This is an opportunity for you to get market share, and when the market picks up, who they're going to look to first? They're going to look to you first, because you stayed in touch. You were still in there when everybody left. You didn't forget about the clients. You didn't forget about your contacts. And so it's actually a blessing in disguise with some bumpy roads. But when the road gets better, you're going to just fly off the charts, man.
Yeah. Such a great advice. Ahsan, it was amazing speaking with you. Where can people reach out to you if they have any sort of question related to real estate? Please let them know your handles.
Yeah, sure. So my Instagram channel is SNR786. You can reach me on Instagram. I also have a podcast. I'm reaching at 50 episodes now, and that's on YouTube. You can search my name, Ahsan Raza Real Estate, and on Facebook as well, Ahsan Raza Real Estate. So pretty simple, but yeah. Other than that, it's been amazing talking to you, man. And I hope to have you on my podcast one day. We'll chat and hear your
Absolutely.
stories as
I'd
well.
love to.
Yeah.
I'd love to. I hope I
Yeah.
got you in the mood. I hope I brought out that energy in you.
I forgot about my fever, so yeah,
I
it was
mean,
fun, man.
everything's good,
It was
right?
fun.
People learned
Yeah,
something. You felt good. I felt good.
yeah,
We did a good
definitely,
thing.
definitely, yeah. No, this is
All right.
amazing. Give value to people for sure. Yeah.
I hope you guys found it useful. Please reach out to Essen and subscribe.